Hello, everyone. Thanks for joining us for our webinar today entitled Building a Resilient Unified Risk Management Financial Crime Network, Why a Holistic Approach for Fraud, KYC, and Ongoing Monitoring is Needed. Thanks again. I'm your host today. I'm Stan Cowan with Effective. Just a couple of housekeeping items to let you know about before we begin. During the webinar, please feel free to ask any questions during the webinar. Just use the Q&A button at any time. We'll get to as many of those as we can towards the end of the webinar. Again, we encourage you to submit those at any time. And as you can see, we have a couple industry experts who have joined us today. They have both spent decades working in their respective fields. So I'm going to now turn it over to Deborah and Ritesh so they can introduce themselves and the companies they represent. Deborah, would you like to start?
Thank you, Stan. Hi, everyone. My name is Deb Geister. I am a VP of Compliance and Regulatory Products at Socure. Socure is a company that does risk mitigation products at the onboarding phase of your journey. And my background is in BSA. I was a BSA officer, as well as in the data industry for several years. So I'm glad to be with you today. So Ritesh, I'll hand it off to you.
Thank you, Stan and Deborah. Hi, everyone. I'm Ritesh, co-founder of Effective. Before joining Effective, I led the global enterprise fraud data science teams at PayPal. Prior to that, I was at another startup, Simility, which eventually got acquired by PayPal. And there I worked closely with the senior risk leadership of US Bank, Itaú, and some of the biggest banks in order to build fraud and technology stack to manage the risk. And prior to that, I worked at Walmart and built models and solutions to be able to tackle e-commerce fraud, grocery fraud, and anything that you can imagine would possibly happen within the Walmart ecosystem. I've been in this industry over a decade, and large part of my work has been focused on building data science and data analytics capacities. And with Effective, we are trying to build a whole unified solution to be able to tackle at scale for financial institution, not only from onboarding point of view, but the entire customer journey. With that said, that's about me. Thank you, everyone, for joining.
Great. Thanks, Deborah. Thanks, Ritesh. Just a quick glance at our agenda today. We'll set the stage by talking about the current state of fraud. Then we'll go into the siloed financial crime prevention elements. After that, we'll hit those three pillars we talked about in the title: fraud prevention, know your customer, and ongoing monitoring. A few more things you're going to learn today as to how to solve for that data and technology challenge, solving for that risk, why both data and automation must be utilized for that holistic 360-degree view, what mitigation strategies work within a multi-channel environment, and why machine learning and artificial intelligence should be incorporated to recognize behavioral patterns to help fight fraud and financial crime. And finally, what role does the human factor play in a unified solution strategy? Back over to you guys.
Well, I think one of the places to start, Ritesh, really is to talk about what's going on in fraud today. We certainly haven't seen any slowdown in the velocity of fraud and fraud cases. And there have been a couple of things that we've noticed at Socure that we can talk about, but I think we have to talk about kind of what is the scope. We've seen big percentages, 200 times potentially, in losses that have increased over the last probably 12 to 24 months. We've seen, about half of our banks that have fraud of some sort that has escalated. And one of the interesting trends that we've seen at Socure is the fact that we've seen a very large increase in the incident rate of synthetic fraud. And so we can talk a little bit about what that means. But I think when you start looking at fraud and what's happening, historically, we've seen fraud, know your customer or your customer due diligence, and AML teams work as separate parts of the organization. I think that's been kind of our reality and our typical state, but there's been more effort over the last even 10 years towards convergence. I think there's an opportunity to learn from each other as we go about that. Is that something that you've seen in your roles?
Yeah, Deborah, I can totally agree with you. In our customer base, we have seen, like, for example, we went live with one of our customers a few months ago, and just in a month of May, we saw 3x the number of applications and realized our solutions, since the way they were built, were able to capture vast majority of the fraud before those applications were approved. They went from 1,600 net new applications a month to 5,000 net new applications a month from a top of the funnel point of view. And we realized vast majority of them were actually synthetic ID attacks. How do you deal with that level of velocity of attack? How do you prepare for your first level of defense, second level of defense, when the moment you go live on one channel, you have attack, they test you out, and you add another channel, then they start testing out on that channel. So it's always a cat and a mouse in a way we see this, but large part of that, at least in our experience, in my 12 years of experience, I've seen a lot of the teams like fraud team, compliance team, and financial crime team have been looking at same data in different places with different lenses, and there has been very little convergence of all three. Fremel has been used for a lot of years now. I don't think it has gotten enough traction up until very recently, where fraud and financial crime teams and compliance teams are now looking at a holistic picture just with the different lenses. I borrowed that term from you to be able to see, like, if it's at onboarding time, there is a suspicious event that we have identified, how do we continue to use that event to learn more and more about the customer on an ongoing basis, and do some sort of a perpetual analysis of the events that are going after the onboarding. For example, money movement events, like, is there an ATO that has been detected and that can be used to stop the money going out of the door, right? Because wherever there is money involved, inherently there is fraud. And when fraud and financial crimes are so tied to each other that anytime there is a fraud, that money is going to be used for some sort of an illicit activity. So how do we sort of break that barrier between multiple teams and bring them all together to be able to solve this larger problem, which is growing at this rapid pace? Like, I can totally attest to the experience from our side as well.
Yeah, no, I think that's a really good question. And personally, when I was in my role as BSA officer, we did perform convergence, right? So we integrated the fraud and the AML teams together. The only difference is, as we started looking at how our fraud teams work, how our AML risk mitigation teams worked, there was a lot of synergy and a lot of crossover between the operational conventions of what was done on both sides. What differed is the timing, right?
Mhm.
Because with fraud, you're looking to risk mitigate in close to real time, as close as we can get. Anyway, and that was the main difference. And then we have some different typologies, of course, that occur in fraud, but they are both sides of the same coin, right? So
Agreed.
fraud is the initial revenue generation phase of financial crime, of that wheel that we talk about. So fraud is the starting point, and then it moves into money laundering, because in order for the criminal element to be able to utilize those funds, they have to cleanse them, right? They have to get them into financial services. And that's really kind of the basis of what we've seen when it comes to synthetic identities. So you think about financial facilitators, and I'm not talking about people that incidentally launder money, right? Somebody that's a small-time operator. I'm talking about really sophisticated, skilled financial facilitators usually launder funds for more than one organization. They're very good at their craft. And in order to do so, they need to get into that placement phase. I need to start to get those funds now into financial services. We're seeing them utilize synthetic identities to be able to do just that, because they have control of those identities. They can manage them and they can build those out into armies, right, of identities to be able to leverage to get into that placement phase. And in some cases layer, but we see them largely in the placement phase.
I think, absolutely. I think you've touched a very interesting point. Like, I think people sometimes don't realize how easy it is to manufacture synthetic identities, and all you need is like handful of those identities being accepted at some part of financial ecosystem. Because once you are accepted by some bank or some financial institution, you're already positively included in the wider data network. It's so much more easier to now connect multiple banks. Like check kiting, we used to think long time ago, because there was a 3 to 4 day delays between check deposit and money leaving. Now we are seeing ACH kiting with the same way. people are creating these chains of these accounts, all you need is like one synthetic identity, and the cost to create those has dramatically reduced with the advent of newer methods to create those identities. It's just become more so, it's not just a data problem anymore. I feel fundamentally we need to rethink of the problem space. And then once we rethink of that problem space, we need to rethink of a solution space, and which is where I think understanding that when synthetic ID is created and accepted, it's always going to lead to a fraud event, and that is always going to lead to a financial crime event. But one part is recognizing this. Second part is how do you build the solution stack to be able to continue to improve on it and reduce your false positive, because sometimes it feels like it's finding a needle in a haystack. Is that something also, I would say, have you experienced that in your past roles or this role, where people like, we have thousands of alerts and we don't even know which one should we focus on, prioritize on?
Yeah, no, it's a reality of the world, especially when it comes to AML detection. When we start looking at transaction monitoring systems, my reality was that out of every 100 alerts that came through my system, 94 of those were false positives, right? So only 6 of those actually went to the case. So that's a really high ratio, and it creates a lot of challenging things within our operations, right? From a BAU perspective, now I'm really conditioned to be able to expect false positives. And sometimes what we've seen is that our analysts can look at something that is a problem, but they don't even recognize it because they're so conditioned, right, to be able to look at false positives. So I think there's a lot of challenge in how we look at financial crime and how we manage that risk, and really how we recognize it. I think typologies are probably not as understood as they could be. From a synthetic perspective, as we're talking about that, one of the things that we've identified is that synthetics on average create a higher loss rate, right, than a typical fraud. So we're seeing an average $1,200 to $1,400 per loss event that can be attached to a synthetic identity. So that can be highly problematic if you're getting legions. And we see some financial institutions that we work with that have anywhere from 1% to 3% of their entire population that are synthetics as we start to review them. Now, if I can detect those at the front end of the process, I can save myself a lot of money with all those false positives and all the transaction monitoring that occurs downstream, right? I can save a lot of money if I can weed them out at the front end of the process.
Absolutely. And I think this touches into another very critical area of how the downstream workflows get even further muddled, because if you don't have a clear strategy on identifying and within your organization calling, this is going to be our policy and this is how we will tag that it's a fraud event versus a credit abuse event, what happens downstream, everything get bundled together, and that becomes like a charge off. And it's incredibly hard for the downstream machine learning models to learn from it, because eventually everything gets bundled together without proper understanding of what is leading to these synthetic IDs, or the IDs that are not yet part of a broader ecosystem, but still have enough indication to be able to find that those are synthetic IDs. And another interesting fact that you mentioned when we were talking a couple of days ago, like imagine out of every 100, 94 were false positive on an annual basis. If in the US, I think in 2022, the number was like 3 million total SARS.
Yeah, I think
that's like,
to be exact. And 3 million of those were directly tied to identity verification issues, right? So the vast majority of what we're seeing in the financial crimes ecosystems that is coming through to law enforcement has some connection or some foundation in discrepancies or problems, right, with the identity verification process. So your CIP is a key part, right, of the journey, and a great place for you to be able to risk mitigate.
Right. And what, in my experience, and I would love to hear your thoughts on it, a lot of time when a new fintech or a smaller financial institution of thinking of solving this channel, they think of fraud and risk mitigation as a problem that adds friction to the customer experience. And I try to challenge that, and I try to add that there is a growth, and there is a growth that is risk averse, right? Without anytime there is money involved, there has to be some sort of a risk. And if there is a risk, you cannot remove that and think of that as only a friction point. You have to think of it as a growth enabler as opposed to growth decelerator. And how do you do that? Like, have you heard from your customers like, yeah, we'd love to have everyone to do ID verification, or we'd love for everyone to do a selfie check, but then we are adding a lot of friction and we see a lot of people never finish this process. So how do you go around solving that, right? I have my own opinion, but would love to hear if you are hearing this from your customers.
Yeah, I think to your point, Ritesh, we are coming from the data business, we hit garbage in, garbage out, right? So
Right.
as we start doing things like labeling your frauds, your money laundering cases, those types of things, that reference point becomes critical in how we then utilize that data back into our systems. And at Socure, we have a consortium, right, which really helps us be able to train the models and be able to look not just at your particular institution and what you're seeing, but across the board, right, where we're seeing problems within the ecosystem. And I think that training of the models, that definition, both from an onboarding perspective, but from, as you pointed out, labeling your fraud appropriately is highly valuable. And that's one of the key things in managing your data that I think is critical. We see a lot of situations where organizations don't label effectively and they don't think it matters, right?
Yeah.
But I'm here to tell you that the better you can be at labeling, the more successful you can be at creating predictive analytics on the front end of the process, because without it, you're lost, right? You have to give those machine learning models a reference point to be able to define what's good, what's bad.
Yeah, and I can absolutely attest to that and cannot reinforce that enough as a data scientist, right? And part of the reason I think in Effective, the way we try to utilize machine learning and AI is to make labeling as easy as possible at any given stage of the customer event, whether it's an onboarding event or a transaction event. Marking something for fraud or marking something for suspicious activity shouldn't be taking minutes and 5 minutes of figuring out what and how those labels to be created, right? So why sometimes it's hard to explain people for what are the longer term implications for it. It's like dropping the breadcrumbs over the customer life cycle, and more breadcrumbs we drop, easier it is for us to identify those patterns. Like one is consortium model, right? Absolutely data that's like a understanding from a network point of view if there is some sort of a gray area which we should be looking into. And as organizations process more and more data, there is an opportunity there for machine learning models to customize even further to understand what kind of attacks that they are exposed to. And those can be learned and adjudicated in a more or less automated manner if there's a proper labeling mechanism in there. I cannot name an institute, but it's one of the biggest bank in the US. In my early days when we were building a first party fraud model for them, they didn't even have a policy to define what would be categorized as a first party fraud, right? Without having that, how do you tell your model what to look for? And if you cannot tell your model what to look for, how do you automate first party fraud? Because if you're looking into 100% of the event, that's like a hugely expensive endeavor that to take. I think that's an important segue into the power of machine learning and AI that we can bring, but without labeling, without providing the feedback, there is no machine learning. There is suspicious, there is anomalous behavior, but then human have to look into those anomalous behavior and then eventually tag them to be able to leverage further. So this is like, when people think of machine learning, they think like, oh, it's just going to reduce the jobs or people are going to be obsolete. My personal view and an effective view is machine learning should be seen as an enabler, because eventually human in the loop have to provide that feedback, which is like a golden data set for us. Every time someone marks as fraud, for example, in Effective, that further enhances our model for that customer. Every single event that we get from a person to be able to track that, right? So that's like that's a point that I want to like go a little bit deeper. Like for example, in Socure, you're mentioning there's a tighter feedback loop. So in the synthetic ID and now over section, like the intersection of synthetic mules, how are you using that to be able to further detect before it happens in an institution? That's something that I'm very curious to learn, and I think a lot of our viewers can also learn from that.
Yeah, no, I think it's a great question. And one of the things that we're doing is working with a number of our customers. And we haven't even publicly announced this, but we've just gotten 314B certification so that we can share more details with our customers about what they're seeing. So we're working with our customers to define what they're seeing as mule activity, where there's crossover between synthetic and mules, because mules, as I'm sure you're aware, are defined by behavior, right?
Yep.
But if we can move some of that understanding, some of that knowledge up front, and be able to put that into our machine learning models, into our detection as we look at the consortium, right? We can be much more effective at preventing it before it gets to the point of costing your organization, a lot of money and resources. So I think that being able to understand, define, and look at synthetics and the paths that they take is one of the things that we're undertaking at Secure, and we're really kind of diving in to see what that looks like and to push that knowledge back in. We also look for each of our customers. All of our customers give us feedback data. So, if you're a large financial institution or you're a small financial institution, we all know that fraud changes, right? It's not a static event, and fraudsters constantly are changing their typologies. In order to make sure that we are on top of that, we need that constant feedback loop to be able to move with the patterns. Back in the day, we used to do some of that trend analysis pretty manually. So we sit down with a group of analysts and say, what are you seeing from a pattern perspective? But we've got things like machine learning and data analytics now, and the data science function is so critical, right, in that regard, to be able to help identify some of those things. You still need the human beings, right? Because
Absolutely.
humans give context to really what's happening in some of these cases. But I think to your earlier point, Ritesh, you talked about how do you define what you're looking for in a model. The same thing is true, even if you're doing all of these things manually. If you can't articulate the type of fraud and what constitutes that type of fraud, how are your humans going to be successful in working their cases, right? So
Right.
I think across the board, understanding the data, leveraging that technology, and in many different points in the life cycle of the process are really critical components, and there's a lot we can learn.
Yeah, no, absolutely. It's one thing, if I've learned in the last 12, 15 years of working in this industry, is the better the information flow is from one team to another. And if everyone is looking at the same set of the data, easier it is to scale, easier it is to operate at a better efficiency, easier it is for us, everyone, to look at the problem in a more holistic manner, right? And large part of that is like people try to bifurcate machine learning and rules as two separate systems, right? But in our opinion, when we look into these systems, these machine learning based system, rule based system, and human, they are a holistic solution to tackle this problem. And large part of the automation that we believe is driven by human feedback, but then that feedback is constantly being used and iterated over and over to improve your models further and further. But models, like every model, has an upper limit on how much more they can generalize, right? They can find 60%, 70%, 80% of the behavior that's going to be remaining, that's going to remain same. But what about that behavior that constantly changes? What is the 10%, 20% new fraud attacks that are being constantly thrown at these systems? How do you iterate for that? There is no other way but to have a very iterative approach in understanding where these new attacks are coming from, asking humans to label percentage of that data, and using them in identifying some specific rules which are high precision, and then using that as an overall strategy to be able to sort of use that at scale. This is what at least we have found what works with a lot of our customers. Is that something that you would have similar experience, or how do you incorporate rule-based system, machine learning-based system in conjunction with human? Is, I think, one big question a lot of our customers ask.
Yeah, no, I think it's a critical point. I think that your machine learning is pretty nimble and able to respond to things, but again, you need those humans to put context around it. How did we define it? How do we now put it into policy? Rule-based systems, especially when you're talking about any money laundering, are always going to be part of the equation. But I think that you have to combine those things effectively, right? And recognize your risk model. one of the things that we did, was we created what I call the operational support team at the bank that I worked at. And we were able to create that iterative process by talking to our analysts and saying, what are you seeing? What kind of patterns are you detecting in conjunction with what's going on in the ecosystem? And this, this on screen, this is our operational support process. So we had, reporting, we looked at how did we identify certain trends, certain changes in pattern that were occurring. And again, this is in a more manual environment, but this easily can have machine learning and other technology applied to this. We created a set of typologies, right? Both fraud and money laundering typologies that we wanted to make sure that our systems detected. We created a strategy out of that particular typology roadmap, right? And it gave us a clean way to be able to show our regulators, this is the risk that we've identified, and this is how we're detecting and approaching that risk, right? So we moved that strategy into our rules, into our machine learning, into those system changes, so that holistically we were looking at how our systems operated per the risk. We tested, right? We created those workflow procedures, because now you have to make sure that the humans are looped back into what the machines are doing, and then we put that into production, right? And then we started the cycle over. So this kind of ongoing iterative process that you referred to, I think, is really valuable. And plugging in where you can automate, where you can do the kind of machine learning and advanced decisioning and even pattern extraction, right? Because there are a lot of things that are not within comprehension of the human mind that a machine can bring to us. And then we can have the humans kind of put the context around it.
Yeah, no, absolutely. I mean, this circle, even if I overlay, for example, automation systems on top of it, follows the same circle. Like, for example, in Effective, we have built this technology which is constantly looking at all of the features that are being currently computed and finding the correlationship between those features and set of those features and the suspicious behavior that manual reviewers are tagging in our system, to be able to find certain rules and policies in a more automated manner, in a form of a suggestion that we can give to our fraud analyst, compliance analyst. Hey, it looks like every time an IP is seen more than 5 times in a short amount of time connected with the email domain that is a throwable domain, coming from a particular distance between the 2 IP events. Now suddenly we are reaching at the limit of human analysis, because now you're looking at 5, 6, 10 different features in conjunction and finding if there are certain patterns to be mined in there, right? So all of this circle is exactly same, even if behind the scene broader platform level automations are done. Like, once you suggest this policy, you cannot just automatically productionize it, because there are huge implications of that on the live customer behavior, live customer experience, right? So the way we approach it from an automation point of view is we suggest these policies, and then we have built a suite of different testing methodologies. Like, hey, you can test with one case, you can test with 200 cases, or you can put it in A/B testing or a champion challenger mode. And once you are comfortable with this numbers that you're saying, then you can go implement those changes in your live strategies and push into production. So, like, role of human feedback is so critically, it's so critical, no matter how much more machine learning behind the scene that we have added. Like, all of these individual blocks have a machine learning component to itself, but to be able to move seamlessly across these blocks, there is a human touch that is required. For example, in testing, we can create those results and set those thresholds. And when those thresholds are met, we can push those to production. But how do you get to those thresholds, right? How do you get to those criterias? It's a broader, I think, organization level discussion that needs to happen before even you think about any sort of fundamental change in your risk and fraud stack, is what at least what we talk to our customers. So this circle of, I would say, I would call it like iterative improvement in your risk stack, is like incredibly important circle. And I couldn't have drawn a better approach to it. But another question that comes from this is like around typologies, right? So how did you think of defining typologies? Because if it is not constantly looking for, if you're not constantly looking for newer and newer typologies, you're limiting on your ability to detect newer and newer patterns, right? So how did you iteratively improve your set of typologies or looked out for new typologies to be able to always improve the system? Like, that's one question that I continue to get, but I would love to hear your thoughts on that.
Yeah, I think that's a great question. And one of the things that we did now, there's two components, right? When you're creating typologies, there's the how, right? The behavioral side, but there's also the who. So who's involved in those types of activities? And so we looked at things like role-based typologies. So let me give you an example. We did a lot of work in my former life around detection of human trafficking rings. And in that capacity, we saw behaviors in the typologies that were really distinct between somebody that was a victim, right, had a certain deposit pattern, they had a certain spend pattern, and it was very distinct in how they behaved within the ecosystem. And then we had a handler, right, who is a different role, had a different profile, and had different behavior patterns. So understanding how those different roles and typologies all work together was how we started to document those things. And we got very precise. When you look at the way most rules function, they are a function of a dollar amount over a certain time period in a certain velocity. We expanded the purview in regards to human trafficking as a for instance. We looked at the spend types. So we saw, for example, when we saw victim side, we saw, deposits that came in cash, and we saw spend in hair salons, nail salons, tanning salons. We knew then it was sometimes of sex trade. And in those cases, we were able to really hone in and detect that behavior much better than just, we're depositing $3,000 over a 7-day period, so many times. So it was much more illustrative because it put context around what was really happening here. We knew what the role was, we knew what the pattern of behavior was, and we were able to detect. And to give you an example, Ritesh, I mentioned that our false positive rate in most cases for our rules was 94%, right? When we applied those additional points of detection in the automation, we were able to drive that false positive rate in regard to things like human trafficking from 94% to 18%, because now we're getting very tight and very precise on what we're looking for because we've clearly defined what the bad behavior is that we're trying to detect. So there's a lot of power in adding data, in being more precise, and not worrying about we're going to miss something.
Absolutely. This actually reminds me of my conversation when I first got into the fraud domain. I had not known what is it about, how is it done, like 15 years ago. Like, I had no clue. With my own way, I was trying to understand, and my manager sat me down, is like, Ritesh, I will explain it to you, and this is hopefully help you. And they said, think of it as there are two kinds of net. One is very wide net that catches a lot of different kind of fishes. But then as you grow in your journey as a better and better fisherman, you find more fine-tuned fishes to catch a separate kind of fish, right? So take your machine learning as wide of a net as possible, where you would use certain conditions to catch as much as possible, but your false positive rate would be slightly higher if you purely rely on those generalized set of rules. Machine learning it's a combination of if then else condition at a much higher level as opposed to a rule, right? And then you identify these behavioral rules, which you layer on top of it to be able to drive your false positive down, right? Just recently, I was talking to one community bank, and they had 18 different, they got hit with the ACH kiting event. In a matter of 30 days, there were 30 or so different transactions, debit, credit, but everything was hovering around $2,000 to $3,000, right? In their mind, they could have, while they're thinking of mitigating that in the future, they are thinking we can code between $2,000 to $3,000, right? A policy every time an aggregation happens within 30 days, 10 transactions happen, and aggregation gets to $30,000 with an average dollar amount of $2,000 to $3,000. We can stop this. That's an easy fix. But then fraudsters are not going to be testing that $2,000 to $3,000 limit. They're going to move to 1,500. They're going to move to 4,000. They're going to move to 1,000. So how are you going to come up with a universal set of conditions to be able to continue to test fraudsters' hypothesis is where the typology, the concept of typology come into the picture. And my conversation with them was like, this is more fundamentally a data and a technology challenge that we are trying to solve, not necessarily a hard-coded set of rules. Because if we have a platform in place where at each step up of $500 or let's say $1,000, you have certain aggregations already identified. Like if it's within the $1,000, 5 or 6 standard deviation away, but the aggregation leads to 10x of that number in a 30 days period, flag it, right? Now you can suddenly explode that at every dollar event, like $1,000, $2,000, $3,000, $4,000. So when fraudsters are testing these thresholds, you have a way to persist those triggers and solve it earlier as opposed to hard coding your logic, right? So it took them a little while to understand, oh, actually hard coded would only solve what we have understood. But what about the fraudsters moving to the things that you have not seen yet, right? That's where my question was coming from a typology point of view. One is the data challenge, second is the technology challenge, and merging them both becomes like I think it's a fundamentally different way to look from solving fraud and risk, which I think in the last couple of years have finally gotten to a point where people appreciate actually, you know what, we are solving a technology problem here, not just a fraud problem here, right? That's what I was trying to understand from a typology point of view. What do you have to say to that, though?
Yeah, no, I think you have to leverage all the tools you have in your resources because we know that the fraudsters are doing the same, right? They're using automation and technology against us. So I think to your point about typologies, as we started to look at what the composition is of some of those different typologies, it'll help us really understand and do a better job of detection. And that example that I used from a human trafficking perspective, when we first instigated the rules, and so we did, again, I referred to the spend on hair salons, nail salons, tanning salons. A lot of times we saw advertising back in the day when there were Backpage and other advertising mechanisms for escort services and such types of things. We engaged those things as primary red flags. When we combined all of those things, we looked at 5 different distinct patterns, and these were small dollar amounts, right? So we're talking hundreds of dollars, not thousands. And so they're always going to fall into the normal band. Your normal rule set is not going to get you there. But understanding that these guys know where the thresholds are, where the trigger points are, they're going to continue, to your point, to move them down. So as we created that logic, we looked at five different points that had to occur at the same time within the rule set to be able to trigger that. We identified the first 90 days when we tested and deployed the rules, we identified 750 cases that were specific to human trafficking. Now, of those cases, as the investigators dove in and started to refine those typologies and look at the patterns of behavior in a more detailed way, we filed, I believe it was about 612 of those we filed SARS on, right? So that's where you got your 18% false positive. It was highly accurate because we were hitting on more points of data. It was not predicated on a certain threshold because the bad guys know very well how to evade that. So I think understanding those patterns of behavior and when they start to shift is always the game, right? That's the challenge. How do we keep on top of that? And the only way to do that is to engage both the machine side and the human side to be able to work together.
Yeah. And I think this also segues into thinking through more holistically how you collect data on your customer, at what point you collect those data. A lot of time people think of these in a simple 1 event, 2 event, 3 event way, like, okay, customer onboarded, I'll collect that. Customer moved money, I'll collect that. But what about other events at the time when they change password, at the time when they change download statement, at the time when they change an account number, for example, from a previous account to a new account? Those events are leading to some behavior, and more data we collect on the customer. I mean, privacy aside, this is with an intent to solve for fraud, not only looking for fraud, but also safeguarding your customer data as well. Like if someone has hacked into your customer's profile, they can change the account number and routing number to their account, and next time pay comes, it can go to their account, right? I think what I'm trying to say is like, typologies would be as good as your underlying data. And without creating this more holistic view into your customer, it's typologies will not be able to bring and any automation system will not be able to bring the efficiency that I think a lot of executives seek to achieve by the way of the dollars that they seek to deploy to solve these challenges, right? So 360-degree view of to your customer or holistic view into your customer, however we put it, I feel this is more fundamentally foundationally a data aggregation, like data collection and aggregation challenge, and then typology, and then a technology problem. Like how do you see that though?
Yeah, I think to your point, that 360-degree view of risk is a critical component, because we talked earlier about silos and how those occur within our financial institutions. And those are for the sake of efficiency and effectiveness. But I think we lose a lot of the learning that we can gain, right, when we silo those operational functions. So I think that there's definitely an opportunity to be able to understand what each of those things mean and how they affect. One thing we didn't talk about is risk assessment. Everything that we do within our compliance and our fraud functions has to be tied back to our foundational risk assessment. So how you make decisions is going to be tied back to that, and how well you've done a job of assessing that risk and identifying those things like the typologies, the type of customers that you have, the products and services, the geographies that we serve, right, and who your customers are doing business with. Those things are all going to factor in how we make those decisions. But I want to go back to something that you said, Ritesh, about when I onboard my customer. I know we're guilty of it in the compliance function. We collect 4 pieces of data, right? We start the journey with name, address, social, date of birth. Okay. Those 4 data elements have been in place since 2003, when the Patriot Act went into effect. They have not changed. All of those data attributes are compromised now, right? Yep. I mean, think about all the data breaches that have occurred in the last 20 years, and we're still collecting 4 pieces of information, verifying those 4 pieces of information and thinking that is enough. That's not enough, right? So we've got to think about an identity more holistically. In addition to name, address, social, date of birth, phone number, email address, device, IP address, all of those things are signals that can help us understand what that risk looks like at the front end. And to your point, if some customer has been compromised, a fraudster is most likely going to come in with clean identity, and then they're going to go in and change, right? So change events can be a predictor, an indicator of some type of risk. And we have to make sure that we look at, again, both the who's involved in this, what is the risk of the profile, and how are they behaving, right? So the who and the how. We have to tie those things together. I've seen a lot of systems where they claim to do that. They don't do that well. And I think, you get into a conversation about things like know your customer. And one of the things that we're hearing a lot about right now is perpetual KYC.
Absolutely.
Right. So how does that impact what we're doing? We're not taking a static approach to risk any longer. Risk is not static, right? Not by
Absolutely
any
not. Yeah.
Of the imagination. It should be dynamic. And perpetual KYC allows us to kind of flow in closer to real time as to what the risk of an identity is. And that should include both who are they and how are they behaving within the organization to have that 360-degree snapshot of risk. I think that's where kind of all of this comes to a point of critical mass, right? To be able to understand here's where we've got the opportunity to do it better, to be able to understand risk and to be able to manage risk in a more holistic and responsive way.
Yeah, I want to take that thread of perpetual KYC and go maybe a little bit more of a elaborate solution space with that. For example, like at onboarding time, you said like we should ask way more data points, and I 100% agree with you. Even if we don't ask for it, we should have a technological solution to be able to capture that data. For example, a lot of time when we get into the conversation with our customers and they're like, oh, we don't want to do the device fingerprinting right now because we don't have engineering resources, right? Or who is going to even collect that device fingerprinting? So that's one challenge. Like, okay, we have that integration built in. Now next step is at the password change event or account change event or some change event that happens at account level. That's also an event that needs to be fed to us, right? But then customers are like, oh, so now you're telling me I need to spend 6 months integrating with you to be able to leverage any value out of it. How do you? It's my executives are not going to sponsor this. While I get what you're saying, I get all of the values, all of the intelligence that I can get out of you or get out of this platform, which can take all of these data and give you more and more view into your customer. Is there something that I can do in a step-by-step manner, like crawl, walk, run phase, that helps me bring this solution to life and also help me win executive sponsorship to start with the solution, right? And then our response to that is great. Then let's focus on onboarding first as much as possible. Dedicate all of your resources, if you have any, to that. But then know that in order to do a great job at onboarding, you need 4 or 5 different systems to come together to be able to give you any good shot at doing a good risk adjudication, right? And then they're like, oh, okay, so are you telling me now I need 5 different systems just for onboarding and then another 5 systems for the later stages? And that's part of the reason I think this is like, I don't want to say like a shameless plug for Effective. This is one of the challenges that we are trying to solve with our customers. Like, don't worry about individual point solutions that you need at each of these customer events. As and when you start collecting those customer events, we will take the ownership of bringing it all together in one single system and providing you the analytical ability to be able to do and understand perpetually or continuously what behavioral changes are leading to your within risk behavior and outside of risk behavior, right? Eventually, it's your risk policy that would dictate what is good behavior, what is bad behavior, right? We cannot be responsible for telling you how you should be managing your risk. But if you have a policy, we can continue to add layers into it as we progress through the solution journey, right? This is something that we continue to hear, and we have to challenge sometime our customers on like, this is for your benefit, your customers' benefit. If you take that view, like these change events are incredibly important, which comes into device fingerprinting, which comes into login details, which comes into before money is moving, detecting if this could be a suspicious activity on account level, like login compromise, right? Because you don't want to stop that at the time and login is happening, because then you're not able to capture more behavior and use it at the time money is moving, right? This is something of an education that we do to our customer, but then it becomes like a technology conversation and data collection conversation. And then it's interesting that you mentioned the perpetual KYC or perpetual behavioral understanding of your customers.
Yeah, no, I think it's a good point, and I think you've got to be clear as an organization what your strategy is, and think about it from this perspective, Ritesh. We're used to dealing with physical environments in the banking industry, right? So we have branches. If you were building a new branch, would you do that without locks on your doors, without protections for your money? No, you wouldn't. You'd have these additional layers of security. The same is true when we work with our digital environments. So as we're in a very digital world, right, post-COVID, you have to have those controls, and those risk mitigation strategies have to be clearly laid out in your journey. You have to be able to articulate and invest in those. And I think an orchestration layer to be able to help you pull together all the different tools that are in your arsenal is a critical component, right? As you're building out those online strategies and resources. So I think it's something you can't do without these days. In a digital economy, we have to be prepared, and you have to have the controls and the conventions in place to be able to protect your organization. We've all seen those attacks where, hey, I launched a new service online, but I'm getting attacked far more than I anticipated.
Absolutely.
So all of those things, the collection of all these devices and these parts of the identity are a critical component. And in the work that I've been doing with FinCEN, as we've started to have these conversations about how CIP has worked and how it should work in the future. What we're encouraging is make sure that you are expanding the definition of an identity to beyond just 4 data elements, right? We have to look at a broader set of factors and signals to be able to determine, is this person real? Is there proof of life? Is there risk that is present within this profile that's critical? And I do believe that as we evolve under AMLA 2020 and some of the regulatory events that are coming, I do think that we will get more and more definition, expansion around what we see as an identity.
Agree with you 100%. And that, I think, if one thing I would add to that is, as we expand the definition, the technological part of it will become even more critical, because expansion of definition means you should collect more data points, which means you should validate more data points, which means you need more and more intelligence to be able to ingest it and then make a risk-based decision on it. Another example that I talk to our customers is, like, for example, you onboarded someone today and they're not PEP exposed or politically exposed person, right? You allowed them, no problem. By your risk policy, they are your low risk customer. But 6 months down the line, at some point of time, they become PEP exposed. And you have no clue, because you didn't think of this in an automated solution. And at some point of time, you ran at your frequency, you ran your checks, and then it came out to be an alert. And you're already 6 months, 7 months, 8 months delayed in doing the mitigation action that you should have done post they become PEP exposed for all their transactions, all their events, to see if there is some activity that needs to be reported to FinCEN, right? And then it creates this moment of, oh, actually, yeah, it's more of an automated solution that we require, as opposed to post hoc or ad hoc solution that we run manually on a regular basis to be able to identify those events. And then that becomes an easier conversation, because it's such a regular use case that happens. A customer was PEP exposed, was not PEP exposed, or not a negative news media coverage exposed, and 6 months, 6 years, 7 years down the line, they became, and the institution had no clue that they had become PEP exposed, because there was no perpetual understanding of your customer moving from low risk to high risk on an ongoing basis in an automated manner. How would you even do something about it, right? So the perpetual KYC part, or perpetual understanding of where your customers stand at any given point of time from a risk rating point of view, is such an important point that you brought up. And technology, again, becomes like a huge part of solving that. And how do you automate that, right? There's a part of it is like human, there's part of it is machine, and then there's part of it is like bringing them together in a platform that enables both and feeds positively into each other, right? That's how at least we think it at Effective.
Yeah, no, I think that's right. And that comes down to defining, again, what does your risk assessment look like? How do we
Right.
define risk? What is high? What is medium? What is low? What factors, right, precipitate that? How do we weight those different events or attributes that occur within the process? So I'd like to ask, from that perspective, Ritesh, how do you identify data assets that are available to your organization? How do you go about, from your perspective as a data scientist, how do you go about looking at the value and the prioritization of those different data assets that are available to you?
Great question. So for us, it's incredibly important to understand there are 3 dimensions to it. One is, what is the cost that our customer can pay for the data assets? Number one, like if your budget for cost of customer acquisition is low versus high, then you have less leverage as opposed to more leverage to be able to pull the data services. Let's say we have established this is our cost of customer acquisition that we can take at the time of onboarding, right? Then it becomes, what are the significant exposures that you have as a financial institution in the past or in the current environment that you are in? Synthetic ID exposure, everyone has synthetic ID exposure. How much is it, right? Then identifying those data sets as it relates to the kind of problem that you are exposed to and where the industry is moving. For example, synthetic mule is one such example. There are very few data sets out there who are able to accurately, one, detect synthetic ID and then tie it to mule behavior, right? So then that becomes more of an expert knowledge into understanding where the industry is heading, what kind of challenges that we are seeing in the industry, and then identifying those data sets that solve those challenges and bringing that as part of our data network within Effective to be able to make it available for the customer. Not all customer would use all of these data assets. They would eventually use what they want, but our goal is to give them as fair of an opinion as possible to be able to solve email risk, phone risk, address risk, SSN risk, synthetic ID risk, right? There is a fraud risk involved in it, and then there is KIP KYC risk involved in it, and then there is a financial crime risk involved in it, right? All of these can be solved in an ad hoc manner or with a more holistic manner. More data services you use, better it is going to be. But of course, there is a dollar associated with each of it. So the conversation starts from dollar, and then it goes into what and how they want to manage risk. And within those, we select what data services would make sense for the customer. Eventually, they are the last decision maker.
Yeah. And I would add to that, one of the things that we do as a general course at Secure is we are anxious to prove our value. So in most cases, we're going to go through an ROI assessment to say, here's how much you're going to spend on the front end, but you're also going to save on the back end, and here's how you're going to get to see that return on the investment. Dollars, let's face it, dollars are tight, and everybody's got limited resources, both in time and money. And so we want to make sure that you're doing the best things you can to be able to protect your organization. We've got just a few minutes left. Ritesh, I want to see if the audience has any questions. I would invite you to put those into the Q&A box if you have any questions directly. But a couple other things that you and I have talked about. We talked a lot about convergence. How do we leverage between fraud, know your customer, CDD type processes, and AML? How do we leverage those things, and how do you start down the path to convergence? Do you have any thoughts around that?
Yeah, it's a great question. Thanks a lot for actually asking that question. So I think as we were talking earlier in this conversation, like historically, teams have looked into the silos, same data with different lens stored in different places. Now what we are seeing, at least where industry is moving, all of these teams have been by the force of rapid increase in fraud and financial crime look into the same data. So at the time when onboarding happens, one of the first check that a lot of our customers are doing are the fraud checks, right? Lowest hanging fruit, cheapest possible check. Move on to KIP KYC check and start dropping tags as much as possible. And as and when they identify suspicious activity, they are asking their financial crime investigations to stay within that same platform on the case management side and use all of the tagging that the fraud and KIP KYC analysts have dropped on top of these events that have happened, right? So the convergence part of it, and when those SARs are getting filed or SARs are getting generated in our system, and feedback is being provided by the manual reviewers, we are utilizing that to, for example, enhance that analytics to our customers even more to tell them, hey, for this case, there might be similarly linked 550, 10 more cases you should look into. So that level of efficiency gain can only come if all of your teams are working on one single platform. And that's what at least we are seeing in the industry is moving towards. And our request has also been to our customer, like as much as possible, converge fraud and financial crime team into one single platform, because you stand to gain massive amount of efficiencies by learning from each other and working together on these cases. At least that's how we are seeing the trend is changing in the last 2 to 3 years. And that's where our customers are also going.
Yeah, I think that's a really good point. That's one of the exercises that we went through at the bank, is to be able to, I always wanted all eyes in one set of real estate, right? I didn't want anybody learning different systems and having to try and blend those systems and gather those learnings, right? Give me a centralized system. We've got all eyes in one set of real estate. We train on one foundation, right? And it gives us a lot of economies of scale in that regard. Yep. I think if you're looking at how do I leverage, right, what I'm doing in fraud and what I'm doing in AML and know your customer, I think the first exercise I would go through is to analyze what your work streams look like in each of those paths and identify the commonalities or the synergies that are present. You also have to recognize what the differences are in those flows. And we did that through facilitation of what we called areas of focus or specialization. So for example, we had one team that did nothing but ring cases. When we identified that there was a ring coming through, right, the fraud team, that was pushed to that specific team. So you create those centers of excellence within your larger organization, and you're still able to manage the timelines that you need to in the responses while leveraging the synergies, right? So it takes a while to be able to map out all those workflows. I remember being in conference rooms with big, gigantic sheets of paper on the wall and kind of laying out all these flows. But that kind of exercise is a very valuable way to be able to streamline your operations and recognize where you've got synergy in the process. And I think
Absolutely.
That kind of brings us to the end of our session. And it's been great having a conversation with you, Ritesh. As always, it's wonderful to be able to talk through some of these issues.
Thank you, Deborah. Likewise, I've had a great pleasure working with you, learning from you, and having this conversation for the last 1 hour. Thanks a lot. Thank you, everyone, for joining. I'll put myself on mute. Stan, over to you.
Great. Deborah, Ritesh, thank you so much for that innovative, dynamic discussion. Just have a polling question for everybody. Before you leave, please answer the polling question. Leave it up for a few more seconds. And I will let Ritesh and Deborah share their final thoughts, and I'll wrap it up while you're doing that polling question.
All right. Well, I think this is a great great conversation. So I appreciate the team at Effective for putting this all together. I think if you are going down the path of trying to gain economies of scale in this day and age, resources are constrained. We're all working with less than what we need. And so I think it's always a good exercise to be able to evaluate, how can I leverage technology? How can I collapse some of my workflows and be more effective and more efficient with the resources that I have? And hopefully, we gave you some ideas to start to do that both on the technology and on the resource side as well. But I appreciate the Effective team for giving me the chance to have the conversation.
Thank you, Deborah. And just to add to that, and as you're looking to partner with both data and technology solutions, always keep an eye on thinking, is that system scalable as we scale as an organization? Or is it a system that we have a risk of graduating from in a year's, 2 years' time? Or can system expand with our specialization as we grow as a company? This would be the only thing that I would add. Thank you, everyone, for your time. Thank you, Deborah, for participating in this. Thank you, Corey, for working with Stan to organizing this. And I've had fun doing this, and I look forward to doing more such conversation with Secure Team in the future. And thank you, everyone, for joining.
Thanks again, everyone. We just hope you enjoyed the webinar today and enjoy the rest of your day. Thanks again. Bye-bye.